Hello, good morning. It's Tuesday the 13th. I'm FX Blue and this is the market brief. So Andrew Bailey's been on. He's on the same page as most other central bankers and remains relatively relaxed about the above target inflation for the foreseeable future. The government removal of all the government COVID support, it takes a step into the unknown, especially for the property and the employment sectors. By leaving structural support in place and allowing inflation to continue over the 2% target, Bailey retains a degree of flexibility if the recovery were to dip. Since the lifting of lockdown, demand has outstripped supply and this has driven the prices higher. The expectation, or blind hope, depending on your point of view, is that the rest of the economy will reopen and the supply and demand imbalance will level out over time. Of course, if that assumption is wrong and inflation is driven to levels that are considered too high, Bailey can step in and start tapering the structural support. Or that's the plan anyway. Yesterday we saw retail sales data and that was a case in point to consider. It was expected to continue higher from the 18.5% we saw last month. Forecasts suggested we could even see 25%. Instead, we saw 6.7%, and that will probably afford Bailey a little more inactivity. The market, meanwhile, remains rather bereft of direction or drivers. The major currency pairs are trading in relatively narrow ranges, as any significant change of direction is really in the hands of the central banker policymakers at the moment. Yesterday, sterling popped its head over 139 against the dollar, but we couldn't hold on to those levels, and we opened this morning around 138.80. And the summer lull is equally evident in the US. There are calls for the dollar index to rally towards 93, but nobody seems prepared to dive into that trade just yet. The call is driven by a view that the Fed will be the first to taper their economic support by reducing the levels of bond purchases. However, Powell's inactivity is good reason to question that logic, and potentially it's the right thing to remain out of that trade for now. Indeed, New York's Fed president was on yesterday. He's saying that the economy has not yet achieved the level of progress needed for tapering to begin. So while there is a degree of uncertainty over whether the Fed is indeed leading the taper race, the dollar index has growing resistance around the 92.80 level. Yesterday we saw euro dollar rally to 118.80, but it couldn't hold on to those gains. The chartists tell me that we'll need a firm break over 119.20 to see another challenge to 120. But chances are slim with the summer lull upon us. So it's all rather uneventful and uninspiring at the moment. That said, I'm always happy to have a chat about your business and go through your budgets, because remember, even the dullest of markets are not completely risk-free. Toodaloo!
If you do not have a clue, then just tweet through and ask FX Blue.